Now, if someone is forced to move as a result of a trustee sale, is there still room to negotiate, or is that it?
It's over.
It's over. The trustee
When a
sale
trustee
is it.
sale occurs,
Okay.
that person no longer owns the home, and in this state you can't reverse that. There's some states which allow you to repurchase your own home, but it's over. And those people, unfortunately, the next step for them is going to be the eviction court. And we actually have a program in the court, and we're seeing a large number of homeowners who are now being evicted, as opposed to the classic tenants who used to be the sole kind of defendant that you saw in the eviction court. But if you're going to do something, you need to do it before the trustee sale actually occurs.
Kevin, are we seeing a whole new wave of people now as mortgages start to reset and we continue to see people who are losing jobs?
Yes, I mean, I think definitely. Certainly the numbers are increasing because we've had the problems with the problematic loans where the interest rates adjust and people's payments are greater. We've had the problem with the declining property values, which makes it harder for people to get out of the tough situation that they're in. But now we have the worsening economy, 12% unemployment rate, and most of the solutions, such as they are, for people who are in trouble are really predicated on the idea that people have income. So if folks are losing jobs, have no income, they're in a very difficult situation. The problem kind of began as a subprime, high-cost loan problem. Now we're looking at a large number of really difficult option arm loans, and we're seeing the face of homelessness is changing as a result of the crisis.
So explain an option arm.
An option arm loan, which was I bet people in California now know about option arm loans. A very complicated loan product that's been around for many years for sophisticated borrowers, but over the last few years with our state's big affordability problem, it was hard for the industry to sell loans to people because they couldn't afford houses. So they started selling option arm loans, calling them an affordability product, and the option arm loan allows you to get someone into a home with an artificially low initial interest payment, artificially low initial mortgage payment per month. But after a period of maybe 3, maybe 4, maybe 5 years, the payments increase dramatically for most borrowers. And this is the period that we're in now. Big payment shock for a large number of Californians.
So what does the individual do, especially if you have one of those option arms?
I think the main message will continue to be probably today to try and find a nonprofit housing counseling agency or legal service office that can try and help negotiate. The option arm folks are most likely to be underwater. A lot of people in California owe more than their homes are worth.
Which is the definition of underwater.
Which is the definition of underwater. And I think your first two questions related to borrowers who are underwater. The president's plan is the main plan to help people avoid foreclosure, and it really does not emphasize reducing the principal, which is the way to really keep people who are underwater in their homes, which is good for them, it's good for their neighborhoods, it's good for their community, it's good for local government. It's got a broad impact, and we need to really look at solutions that are targeted not just generically, but for people in California.
What about the notion of bankruptcy? Is that an alternative to foreclosure? Anna.
It's an option that I would have to say consumers need to sit down with an attorney who specializes in bankruptcy. Many people are declaring bankruptcy just on a whim and haven't even explored the possibility of modification, what other options are there. So they really need to do their research and seek a professional opinion. Oftentimes, people who declare bankruptcy, I hear all the time, well, my neighbor did it, or a family member did it, so it worked out for them. I'm going to see how it works out for me, and it doesn't necessarily turn out as great as I thought.
So Kevin talked about the far-reaching problem of this foreclosure crisis. Another group are tenants, and Anna, you work with those individuals, and what are the problems you're seeing there?
Well, tenants are uniquely situated insofar as homeowners who are facing eviction, or foreclosure, they really see the train coming for some time. They've been having financial difficulties for a while. They're getting notices from banks, no doubt calls, etc. But tenants who are in these properties that are being foreclosed on are usually sitting ducks in many respects. They have no idea what's taking place in the world outside of them. I regret to say it's the rare occasion where there is an owner landlord who is being forthcoming with the plight that they're engaged in at that moment. and obviously has a very high interest in continuing to collect rent to try and save the property. At some point, that baton does get passed if they aren't able to save their property, and at that point there is a new owner on board. A lot of times the tenants have no idea who that is. Sometimes there's even gone as far as an eviction, as Martin alluded to, an eviction being filed in court that names the homeowner and all other named occupants, if it even goes there. So the tenants are still persona non grata in the court process, which is what we would typically utilize to protect the rights of tenants. So President Obama on May 20th signed into law, as we all know, the Helping Families Save Their Homes Act, and contemplated tenants in there and recognized that they needed adequate notice and that that was something that had to happen before you could lawfully evict anyone.
We'll get back to that thought. Thank you, Anna. And we'll take more of your questions in just a few moments, but first we'd like to share some information about mortgage rescue scams that target homeowners facing foreclosure. KTEH's Becca King-Reed spoke with Jim Sibley, Deputy District Attorney in the Santa Clara County District Attorney's Office.
This is such a perfect thing for predators. It's like chumming the water. You've got desperate people and their largest asset out there. So whenever a notice of default is filed on a home, it's filed publicly at the recorder's office. And every day there are people down there copying each of those documents and selling the lists of everyone that a notice of default has been filed on. And that goes out to everybody who might want to take advantage of them.
Now, what kind of things are they offering?
If you wanted to look at what to be aware of that someone coming to you is possibly a scammer, promises. If they're guaranteeing results, if they're telling you, 98% of our loans get modified, don't believe them. That's just not the reality today. If they want money up front, in California, the only people who can accept advance fees for foreclosure consulting after a notice of default are attorneys or specific brokers approved by the Department of Real Estate. So if they want money up front to do a loan modification, they're probably planning on taking advantage of you.
Can you tell us about the bait and switch tactic? What is that?
Well, you've got to be aware that a lot of times they'll talk to you about one particular thing. We're going to modify your loan, or we're going to get you a better deal, and then you come in and suddenly there's piles of paper, and it could be something completely different than a modification. It could be a high rate refinance. It could be actually giving your property, deeding your property over to somebody where you still owe the bank, but they own your title. And a lot of times they'll approach you with offers like this to say, you transfer the title of your property, we'll get a better deal because we have good credit or we know somebody with good credit. You stay in your house, you rent it back, you lease it back, and when you get on your feet, we'll sell it back to you.
Oh, sounds tempting.
It sounds very tempting, and it's just a great way to lose your house.
So what if someone falls for one of these? What should they do?
Well, obviously, if you fall for it, the very first thing you should do is get back in touch with your lender, because the one thing almost all of these scams have in common, they'll tell you to ignore the mail, ignore the calls, we'll deal with your lender. If you don't know what's been going on with your loan, the odds of you having a trustee's sale, losing your home are good. So when you realize something seems wrong, the first person to call is your lender. The next person to call is going to be your local police agency, or call one of the HUD licensed consultants that will, for free, do the exact same thing these people are offering to charge you thousands of dollars for.
We're here to give you more advice and information as we answer your questions, so give us a call at 1-800-771-KTEH or email us at mortgage@kteh.org. Mava Elise, what kinds of gimmicks are you seeing in your work with people who have been victims of predatory loans that we've just heard about?
Well, one of the gimmicks, and I thought of it when you were asking about the bankruptcy question, one of the gimmicks is to file bankruptcies on behalf of homeowners, not tell them that they are doing it. So the scammer does not tell the homeowner, I will file this bankruptcy. Instead, the scammer presents a sheaf of paper, sign here, sign here, sign here, or will forge the homeowner's name on a bankruptcy petition, which effectively slows the foreclosure process down, because there's an automatic stay, an automatic break period required under the bankruptcy law. And sometimes that includes, there are other permutations to this, But that screws up somebody's credit. It wastes their opportunity to use bankruptcy appropriately. It can really be an appropriate tool sometimes. I also see people being marketed too heavily in their own language. And I think people really need to be extra cautious when somebody who looks like them, sounds like them, is approaching them and is telling them. I was just talking to a client the other day. She said, well, this person is a good Christian, so I paid him the money. And they haven't done anything for me.
So here's someone's trying to get help. They're in all these problems, maybe underwater, and then they're facing this potential. So how do you know? How do you navigate through to find someone who, so you won't get into one of those scams?
I want to make the point that way too often, by the time people call us, they've already spent $3,000 to $5,000 to some kind of rescue firm or attorney or somebody who claimed that they were going to help them. And of course, the ones who call us are calling us because they got no help whatsoever. So my point would be, and my tip would be, if anyone who asks for a substantial sum in advance of performing services is almost certainly a scammer. And there are some for-profit entities out there which may be genuinely trying to help, but most of them will work on a you pay us if we get something for you basis. And anyone who wants a substantial fee up front is almost certainly going to keep the money and leave you with no particular help from that. So one real suspicious sign or one danger sign is anyone who asks for a substantial fee before performing service.
Cheryl.
Yeah, I have a lot of thoughts on this as well, but I feel that the consumer really needs to take control of this part of their of the modification. And just like in getting a loan, you have to take control for anything that you're going to sign, anything that you're going to get involved with. So keep in mind that the California Department of Real Estate considers loan modifications a licensed activity. And there's a lot of companies out there, they're advertising on the radio, the TV, you know, they're just bombarding you. And many of these people are not licensed. So I think number one, if you're going to consider paying someone, and like I said, I really think look at the non-payment options first. But if you just feel like I really can't do this alone, I need to pay someone, check to see if they are licensed by the Department of Real Estate. Do they belong to a local real estate board? Typically, the people that are involved in the local associations are more ethical, I would say. They subscribe to some higher ethics typically. And are they a member of the California Association of Mortgage Brokers? We also have people that that can get an integrity seal, requires a background check and things like that. So check to see that you're dealing with reputable people to begin with. And obtain references. Don't go with the first person, even if you have that feeling it's Christian, they're from my church. You know, interview several people. And I think that you also need to keep yourself involved in the process. If you do give somebody some money, basically give them the money and say, okay, my problem is solved. You have to stay involved in the process. You know, keep calling them, saying what's going on, this type of thing. If something isn't seeming right, then you need to act on that.
Because one of the calls we had was from someone who paid $1,500 in this case, and then the servicer stopped calling. Said, we're going to help, and then they just didn't call. What about tenants? Julie, we talked earlier about tenants. Are we seeing scams there as well?
Well, the scams that we're really seeing are efforts on the part of whoever resumes management of the property. Banks don't like being landlords. A lot of times it's owned by partnership groups post-foreclosure who will hire real estate agents or real estate companies and sometimes even local lawyers to undertake efforts to remove any tenants that may be in the property. While there are some folks who conduct themselves above board, regrettably that's not predominantly what we see. And there are so efforts taken to evict tenants in ways like shutting off utilities, locking people out of their homes, removing appliances and fixtures from the home while the tenants are still in there, showing the home while the tenants are still in there.
So what can the tenant do in that case?
Well, first of all, they should get good legal advice, because what's also front and center and key to a tenant is imminently they are going to lose possession of that property, but they have certain rights and certain time accorded to them to do so. And typically tenants have about 90 days under Obama's new law to receive notice, unless there are other things that come along, like a lot of times real estate agents will come out and say, we'll give you a cash for keys deal. And a cash for keys deal is basically, would you leave the property sooner than the statutorily required notice of 90 days and we'll give you some money. And again, we counsel people to come and see us immediately because those deals are not as great as they seem either.
So 90 days, that's key for the tenant to know
It
about.
is key.
But for we have a lot of rent control jurisdictions in California and in the Bay Area, and they cannot be evicted. If they live in a rent control jurisdiction, foreclosure is not good cause to evict. So San Francisco, Oakland, Hayward, East Palo Alto, those tenants should be protected and should not be getting evicted. Maybe a cash for keys offer, but they shouldn't be getting pressured or locked out illegally if they don't want to leave.
Is there any one source homeowners can go to, tenants can go to find out information to avoid these scams?
I will say that our website does have some information. So in the resources section about tenants' rights and foreclosed on properties, homeowners' rights, and some tips on how to on what they can do. And I'm sure that Bay Area Legal Aid also has some helpful information on their website.
Yes, and KTEH.org.
And KTEH.
Federal Trade Commission, FTC.
Federal Trade Commission, yes.
DRE. Yeah, Office of Thrift Supervision.
Okay, we have a question from a viewer. If you have a reverse mortgage and are in trouble, who can help? Let's first of all define our terms again. Reverse mortgage, which has been popular especially for retirees.
And actually, I'm not sure what this person is the details of this person's problem, but actually we have found a reverse mortgage for some seniors to be a tool to save them from foreclosure. We have, on a fair number of cases, we've been able to use reverse mortgage to prevent foreclosure, because essentially what it means is that the equity in the home, and there has to be some equity, but the equity in the home is converted into cash. The senior is allowed to stay in the home, so they get the equity and get to stay in the home at the same time. And the importance there is that they can take that cash and pay off what's called the front mortgage or the original mortgage. So it's usually a helpful tool, and you can't really get in trouble on a reverse mortgage because you no longer make payments. The mortgage is dealt with when the senior either dies or sells the home, and then the mortgage becomes due. But as long as the senior stays in the home, they actually don't have any payment obligations.
Okay. A reminder, please keep your questions coming to our phone bank by calling us at 1-800-771-KTEH or email us at mortgage@kteh.org. We'll answer as many questions as we can.